Greetings and welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like Missouri to more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, we are discussing how to move your existing LLC or corporation out of Missouri to a new state to avail yourself of tax benefits, among other advantages. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, Missouri ranks as number 12 on the Tax Foundation's most recent state tax competitiveness index, up 1 position from 13th. That's not a terrible position, but it's also not the best. It ranks 5th for corporate taxes and 5th for unemployment insurance taxes. The Tax Foundation describes Missouri as achieving its position by applying low rates to broad bases while avoiding the structural provisions that weigh down other states. For example, Missouri does not currently impose a throwback rule, a capital stock tax, an inventory tax, a gross receipts tax, an estate tax, or an inheritance tax. The corporate income rate is a flat 4%, which sounds good until you remember that certain states have 0, and that 4% is tied for the second lowest among the 44 states that impose one. That's an important caveat. Remember, some states do not. Missouri exempts capital gains from its individual income tax. For a state that imposes all 5 major tax types, Missouri has built one of the cleanest tax codes in the country, relatively speaking. The individual income top rate is 4.8%. That rate has been reduced over the past few years, and this November, Missouri voters may get a choice to amend the state constitution to use future revenue growth to phase out the individual income tax over time. That's not a done deal. That is a maybe. If that ballot measure passes, Missouri would join the small group of states on a legislated path to eliminating their individual income tax. Now, that would be a meaningful shift, but the measure, as I said, has not yet passed. The rate today is 4.8%, and that is reality. And the phase out depends on a ballot initiative, a constitutional amendment process, and revenue growth that no legislature can control. Missouri also permits local income taxes, which is unfavorable and which adds a variable cost depending upon where the business operates. The local income tax is the provision that prevents Missouri from ranking higher on the individual income tax component of the index. Kansas City and St. Louis both impose local earnings taxes that increase the effective rate for individuals above the state level. For a business owner operating in one of those cities, the combined state and local tax rate exceeds 5.5%. The weakest component of Missouri's tax code is the sales tax. The state rate is 4.225%, but local sales tax rates are nearly as high as the state rate, producing combined rates that exceed 8% in many jurisdictions and approach a whopping 10% in some. A voter-approved constitutional amendment restricts the legislature from broadening that sales tax base, which means the state cannot offer high rates by taxing a wider range of goods and services. The sales tax rate remains high because the base stays narrow. That's basic math, and the Constitution prevents the legislature from changing it. State and local tax collections per capita are just a hair under $5,000, which is among the lowest in the nation. State and local debt per capita is $5,872, and public pension plans are fairly well funded at 85%. All of that to say, the overall fiscal picture is relatively solid. Missouri is not a state facing an imminent pension crisis or a structural budget imbalance. The rate is not fiscal pressure. The risk, rather, is that Missouri has done most of the hard work and stopped short of the finish line and very well may never cross it. To put all of this in perspective, on $500,000 of pass through income, almost 5%, or 4.8% to be precise, produces about $25,000 in state income tax every year. Add the local earnings tax in Kansas City or St. Louis, and the figure approaches $30,000. In Florida, Texas, and certain other states, that figure is zero. Over 10 years, the difference between $27,000 per year and zero is almost $300,000. That is a house in some places, and that's before we factor in the importance of the concept of time value of money. Missouri's capital gains exemption and low corporate rate are real advantages for certain business models, but they do not eliminate the onerous individual income tax on operating income. Missouri's 4% corporate rate is the second lowest in the country among states that impose one. North Carolina is a little lower and also on a path to eliminate its corporate tax before 2030. But the lowest corporate rate among states that impose one is still infinitely higher than zero. Texas, for example, does not impose a corporate income tax for most small and medium-sized businesses. Florida also does not impose an income tax for most small and medium-sized businesses, and neither of those two states impose an individual income tax at all. Keeping all of that in mind, redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income tax, but only when performed in strict compliance with the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both Missouri and the destination states. When executed correctly, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. Foreign entity registration is not the same thing as redomestication because foreign entity registration, also referred to as foreign qualification among other terms, does not change the company's legal domicile. In fact, it keeps the company in Missouri indefinitely and merely adds a second layer of compliance obligations in the new jurisdiction. A traditional merger, which is also not the same thing as redomestication, establishes a new distinct entity in the destination state and can trigger serious tax complexities. Finally, dissolution is the death penalty. Dissolution terminates the company. Dissolution is not a relocation mechanism. It is a liquidation mechanism, as in going out of business for good. If you have a so-called professional suggesting dissolution as a relocation mechanism, they probably misunderstood the question at best or simply don't understand what they're talking about at worst. Redomestication, when paired with a change of personal residency and a reduction or outright cessation of business operations in Missouri, can reduce or even eliminate state tax exposure in that state for the entity and its owners. Now, Missouri is not in bad shape. It ranks in 12th position. The tax code for that state is fairly well designed. The corporate rate is low, but 12th place is not first place, and 4.8% is infinitely more than zero. Some states, including Florida and Texas, impose no state-level personal income tax. The ballot measure to phase out Missouri's income tax has not yet passed, at least not as of this moment, and it may never pass. Now is the time to act before the Missouri legislature amends the law to hinder or even eliminate redomestication. If you have any questions regarding redomesticating your existing LLC or corporation out of Missouri, please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific situation. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is general in nature and is not legal or tax advice, because that advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to the opportunity to work with you, or at the very least, speak with you very soon.